we detected an unusual trade worth $25 million on Carvana stock, ticker symbol CVNA. And what's also very unusual about this is that Carvana reports earnings in a few days on February 19th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Carvana or bearish and selling before earnings. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, let's dive into our analysis. Now, as we can see here on the stock chart, it is very overbought on the RSI indicator. And so this is a potential risk going into earnings on a technical analysis basis. However, the stock is showing very strong momentum, hitting a new high today. So that means there is not much of a resistance level to reject price back down. And so technical analysis can get confusing, giving both sell and buy signals. And so without further ado, let's analyze the data of this wealthy investor's trade to get a clear signal from the rich. As we can see here, on the options time and sales tape, the most unusual trades happened at 1:16 p.m. at the 23rd second mark for these March 21st options at the 280 strike calls and the May 16th options at the 360 strike calls. 17,000 contracts were being traded for both of these options. Now, instead of adding both 17,000 up to get 34,000 contracts, we need to be very careful here with this data, because when we dive deeper into the data on the option chain, we can see here for the March 21st options at the 280 strike calls, we have an open interest of 18,406 contracts, which is more than the 17,000 being traded. And so based on our analysis, this wealthy investor was closing these options to take profits. This data is very important to figure out, because if a wealthy investor is closing their trade, it could indicate that it's time to step back rather than start a new trade. It's like a fund manager signaling that many institutional investors are withdrawing from a mutual fund. If the insiders are cashing out, why buy more shares? And so we always take this extra step to analyze the data at a deeper level, because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to inaccurate results and losses for those following unusual option activity. And so if we go back to the options time and sales tape, this wealthy investor was closing out of these March 21st options at the 280 strike calls and rolling these options to a higher strike price at the 360 strike calls and a further date out. This means that these May 16th options are the new open trades. And so we can calculate the total cost of this new trade, the price of 14.73. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each call option costs $1,473 each. And since there was a quantity of 17,000 contracts, we multiply that out and we get a total of $25 million for this trade. But keep in mind, the earnings report is coming up in a few days, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website at the top here, where you can get access to better trade ideas that the wealthy investors and potential insiders are trading, because not all of these unusual trades will be profitable. Some will be a loss, but as long as we diversify our portfolio with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here on the options chain for the May 16th options at the 360 strike calls. Since this was the new opening trade, we also bought these call options and got into the same position here. POS stands for our position, and the green color means buy, while a red color would mean sell. How did we know these were new opening trades? Notice that these options have an open interest of 106 contracts, which is much less than the 17,000 contracts being traded. It would not be possible to close out that many contracts if there were only 106 open contracts. And so, based on our deep analysis of many data sets, this wealthy investor bought these call options at 14.73, the same price as we calculated earlier for these unusual options. And so when we analyze this trade, you can see here on the risk profile profit loss graph, where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple and blue lines are trading below it, this trade becomes more negative loss. And if it trades above it, this trade becomes more positive, profitable, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay. And so as time goes on, this trade will lose in value. And that is why you can see the purple line, which represents the current date, drops down lower to the blue line, which represents the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as we approach the expiration date. And so you can see here, even though these call options have a strike price of $360, the stock needs to trade above $374.75 per share for this trade to be profitable at expiration. And because of this risk, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades because we invest most of our capital into the lower risk, higher probability of profit trades that we share on our website. We'll put a link here where you can also learn about trading strategies to reduce risks while increasing profits. Let us know in the comments below, do you think Carvana stock will rally after earnings, or do you think it will crash down? As usual, please hit the like button. Subscribe if you haven't. Take care and have a wonderful weekend.